Hello everybody, today we're taking a look at our daily horizon view. The date is the 3rd of the 4th, 2019. Our spotlight is ASX ETF's S&P Biotech ETF. And of course, as always, this is our top 5's ASX Exchange Traded Funds. Okay, moving on to our quick overview of the market today. We closed out 0.65% up at 63.68. We had materials, industrials, and commercial services doing most of the heavy lifting. Pretty much only energy was in the red. Commodities, we had a little mixed. We had silver, didn't really move. That's at 0. Crude oil up 1.3%. Top 5 rises. QR. This is our spotlight today. ESGI, FAIR, RBTZ, and IKO. We'll go over QR later, but we were up 2.53%, which equated to $1.39. Get my words out properly. We'll have a quick run through for ECGI because it's not really a common one from memory. That's the VanEck Vectors MSCI International Sustainability ETF. So that's passive management strategy, and they invest directly in international tech securities. So if you're looking for exposure to tech, FAIR is the BritishShares Australia Sustainability Leaders, and then you had RBTZ, which is the BritishShares Global Robotics and Artificial Intelligence, and IKO is the iShares MSCI South Korea. So there's a bit of a biotech and also sort of just tech in general, people looking for exposure to that type of sector. So for the top 5 percentage falls, we had VLC, BEAR, MVB, IJR, and VCF. VLC is the Vanguard MSCI Australia Large Companies Index, and that tracks the top 30 companies in the index. Similar concept to the Dow Jones in America, which tracks the top 30 big industrial companies. BEAR is self-explanatory, so that's hedge against falling market. MVB is the VanEck Vectors Australian Banks ETF. IJF is the iShares S&P Small Cap, and we had VCF, which is the Vanguard International Credit Securities Index, which tracks the Barclays Global Aggregate Government Related and Corporate Index, which is hedged to the Australian dollar. So top $5 rises, we had IHVV, which is a common one, SPY, which has been popping up lately, IHOO, which is a reasonably common one as well, and we had IKO, and we had QR. We've gone through QR. Let's have a quick squeeze at IKO to refresh people's memories. Now, IKO is the iShares MSCI South Korea Index, and that one tracks stocks traded on the Korean exchange. Top $5 falls. We had IRJ, VLC, IZZ, VCF, and ILB. We had a quick look at IRJ before, VLC we've had a quick look at. Let's have a quick look at IZZ. So IZZ is the iShares China large cap. So that one picks out your large cap stocks in China. I suppose you could kind of lump that in with the emerging market ETFs. Top 5 number of trades. BAS, STW, IVV, IAF, VAP, so no major surprises there. IAF is probably one that we don't see in this one a lot. Flicking through, IVV is the iShares S&P 500 ETF. That seeks to match the yield and price performance of the US large cap stock market. So I'd say it's quite obvious, S&P 500. Top 5 for volume. So there's a little bit of volume going through for AAA, almost 500,000 today. We had IOZ, STW, CNU, and NDQ. So AAA is the BetaShares Australia High Interest Cash ETF. So an alternative to putting your money in the bank. Just quickly looking through, we'll have a quick look at CNU, which is the VanEck Vector's China New Economy. So that looks at sort of emerging sectors in China. Moving on, let's check out value. So top 5 for value. We had AAA, which is no surprise, STW, IOZ, BAS, and IVV. Because we had quite a lot of volume through for AAA, it's no surprise that we had a big value. So one of the higher values for quite a while. So 22, almost $23 million traded. The others are about standard or thereabouts by the look of it. Maybe a little low, some of those ones at the bottom. So moving right along to the Spotlight ETF today, and it's ASX QR ETFs S&P Biotech ETF. So the ETF aims to provide investors with return that before fees, blah, 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 tracks the performance of the S&P Biotechnology Select Industries Index by holding all of the shares that make up the index closely in proportion to their index weights, which is a mouthful. So just a quick cap up of biotech. So the biotechs typically, they're a bit different to health. So they focus on the research and development of innovative drugs and treatments. They're using complex biological materials. So they're difficult to develop effectively, highly speculative. Many companies don't ever create anything and lose a lot of money. Outcomes are turned almost entirely on the success or failure metrics with high potential reward for winners. So, high risk, effectively, that's what it's saying. That's how I read it anyway. Investing across the entire sector removes, so they're trying to they remove a bit of the volatility by investing across the sector. So they try to limit the amount of winners they have to pick because it's quite difficult in that sector. So the QA ETF holds only stocks trading on major US exchanges. And the index includes filters on market capitalization and daily trading volumes, so to keep it all leveled up. Moving on. So our net asset value is $203.52. trading above the net asset value at $206.26. Management fee, and this one's not too bad, it's 0.45%. No distribution that I know of as of yet, so therefore the dividend is 0. Just a quick little bit more of a recap, some more points. The ETF follows the S&P Biotech Sector Industry Index. The index has achieved growth of 21.9% in Australian dollar terms up for 5 years up until 31st October last year. So the fund holds 120 biotech firms, so companies with a focus on small and mid-cap companies, obviously because they're trying to pick the winners. So the ETF is a high growth orientated product constructed mainly around the mid-caps, as I've just said. Management is expecting to see M&A in the sector. That's why they invest mainly in the mid to small cap sector. So currently Cure has achieved 12.39% since inception, as mentioned in late November. So it's relatively newly listed product that is focused on what I call a high risk sector. So, you know, my opinion would be to watch and wait for 6 to 12 months just to see how it performs and to see if it can keep up and match the index. In the meantime, I would have a look at IXJ, which is a healthcare sort of focused one. So, you know, quite possibly less risk in that one. So the top 10 holdings are there. So pretty much companies I've never heard of because I don't follow the American biotech sector. So we've got our graph there. So we've done, you know, 12.5, almost 13% over since inception. As always, everybody, information only. We need to go back and take assessment of our own situation before we buy or do anything, and also, you know, definitely take our own circumstances into account. Thanks. Thanks for listening, guys, and we want to crack your financial sky. We want to give you some good information to start your own investigations off regarding ETFs and then stocks. So give us a like, subscribe. Once again, thanks very much, and information only as always. Thanks guys. Bye.